This is Justin Pulitzer. This is a midweek update dated October 15th, 2014. And I'm starting on some big charts, and I'm going to work from a longer distance out into what's going on now. I just wanted to show you this where zoomed out just to give you some perspective of just how far the market has really come from the bottom and where we kind of launched from after the last bear market, which was the debt ceiling fiasco, which took the S&P down 295 points, which was pretty painful. I remember those days. It was it seemed like the market was moving hundreds and hundreds of points intraday, every day. Sound familiar? So let's see where we've been. We've been rising with QE for quite some time since those lows in 2010, the bad old days, and we've been in this pretty defined channel for a while, and we've been kind of riding the upper part of this channel. We got S&P 2000, and we've now corrected pretty steeply to the bottom of the channel. The actual bottom is a little bit lower. I have it marked with a note here at an alert for 1815. We didn't quite get there. We got to 1820, and we bounced pretty decently off those lows. The question now is, what now? Really? Let's take a look on a chart here. If you take a look, we formed a bit of a bottoming tail hammer here after this really steep decline after we broke. I had discussed, let me come in a little bit more for you guys. I had discussed this double bottom low being exponentially more important now that we had rallied off of it and we stopped at this downtrend line, but we lost it and we were in free fall, like I kind of said we might be, down to the 1900 and the 200 NMA, but the free fall did not stop there. We had tried to bounce yesterday, did not finish with any conviction, and had this absolute cascade today and finished with a bottoming tail hammer. So, is it over? My thoughts are maybe, although it's not looking so great. You can see we came up here just to under these. We didn't have a full gap fill, but we closed below the bodies of the prior 2 days. We didn't close very strong, and I think the market was down pretty decently, another 10 handles or so after hours. So what I think needs to happen now for the entire market is for it to make a higher low. And I would think it would be tradable long over this bottoming tail hammer. So if tomorrow somehow we get over this 1874.18, I think you can play long, possibly for a move back up even to the a retest of the 200 MA, and this breakdown here, which was 1904.78. Let's mark that on the chart. So if we can get over this high, I think the play is possibly to here, which would also coincide, maybe if it's over a couple of days, to this really more dominant trend line, and then maybe there's a short initiation. I want to just show you one more thing. If we were to have an equal decline, if we lose this channel, the debt ceiling equivalent would take us down to 1723, which is, I'm not calling for that necessarily, although you can see if we take out this reference low here, which is the channel low, and this past low, the next reference low comes in kind of close. You can see it's down here at 1737.92, so that would be a heck of a lot more pain to come down here to have that kind of a measured move. Let's see what happens with this low here. If we lose this, there really is no major support though until down there. So keep that in mind here for longs. If we take a look at the NASDAQ, kind of similar picture. We had at the debt ceiling debacle a 580-point decline. If we were to have something similar, that would take us down to, I don't know why it's not showing the labels here, but that would be 40, 30, 52 if you want to set an alert. You can see we had other similar declines, or large declines, 407 points, 386. This one's a little smaller, 237. I don't even know why I bothered with that, 425. And we're already at about 493, which is a pretty healthy decline. So the question is do we get this kind of a move and have another, another leg down, or do we kind of stabilize here and bounce? The stochastics on all of these are showing oversold below the Bollinger Band. The only issue with that is they can remain oversold. They don't have to. Like up here, they remained overbought for quite some time. They could do something like that down here. Very, very possible. The NASDAQ, you can see, let's show you. Closed a little bit stronger. It did close into these bars a bit, although the weakness in Netflix after hours is weighing on a lot of the momentum stocks. I'm going to discuss Netflix in a few minutes, but this low again really key. If we lose it, the reference, the other reference low down here comes in at 39.46. And that would be actually worse than the debt ceiling debacle. I don't think things are quite that bad, although the problem right now is the uncertainty with this Ebola, with Putin, with various other issues. So you can see down here there would be some more, there's some more congestion, and this would probably catch price a little bit, although you can see we did dip into there a bit and bounced. A little bit stronger close over this high. I think we can again also see the 200 MA and probably back to this breakdown point, and then we'll be re-examining possibly with some shorts. The Russell 2000, wow. If you take a look at what happened to this thing in the debt ceiling debacle, this thing had a 266 point drop, and if you had the equivalent, the RUT's got quite some way to go. That would take it down to 946, and oddly, eerily close to the 61 Fibonacci of the major breakout run. The RUT, though, has been the last couple of days, and I've seen other quote-unquote technicians discussing this as well, has had some fairly decent relative strength. It closed well into the bodies, took out the bodies of the last 3 days, and closed up near the highs. The only issue with the Russell is, as you know, we had these equal bottoms and a breakdown here at 1082, and we're still below there. I would be curious to see if we can breach back up there. Maybe this doesn't quite make it all the way up. This fib level is not correct. Let me adjust that here. I'm sorry this wasn't correct on the chart. I hadn't adjusted it. 1040.46. And you can see that oddly, if we came up to a 38.2, we'd be just under 1100, the 1095, which would take us into these lows. And if we got back up to the halfback, the 50% fib, we'd be into the 1112-ish, which would coincide just, I would say these lows would probably be a little bit, this 1107. So I'm thinking short, somewhere between this 38.2 and the 50% fib would be really great if we can power up through here and get some kind of a squeeze going. The 20 MA will probably come down a little bit more, and that's usually an important level for momentum, and we all know the RUT is momentum, so I would be interested in trying to test short here, maybe selling some out of the money calls or something as the short proxy. So that's RUT. Something else that has been pretty insane is the TLT. I want to give you guys a little bit of perspective on this thing a little bit further out. This is the high from the crash of 2008 and 9. At 9, we're at peak. This is really annoying. I don't know why it does this. You can see, and that doesn't want to go away. I'm sorry, guys. We're just going to have to deal with it. It does this sometimes. You can see the peak here was 123 back in those bad old days. And then we had this peak here, and we're kind of getting close. Today we had a reversal, but we got up to 127. I'm sorry, I know a bull is scary, but things are not as bad as when Lehman Brothers was, in bankruptcy, and the credit system was and financial system was in complete collapse. Very different type of a situation here, in my opinion. I think the bonds are getting really, really overdone. Any spikes in here, I would think, are probably shortable. It looks like it may have blown its brains out today. Let's go into the daily. If we go into a 9-month daily, you can see we had this big capitulatory spike, huge volume up here, and we came back down and closed, not on the lows, but we did kind of get close here. Did we fill the gap? Let's see. Kind of. Close enough for government work, so to speak. Kind of fitting for treasuries, right? Sorry, this chart's a little muddy. There are a lot of time frames and levels on here. This Fibonacci is no longer relevant. The question now is going to be if we do get a bounce in this, which I expect there probably will be. I don't think these guys are going to give up so quickly, the bond bulls. How far up in here do we get? I do think that this is shortable on rallies at this point. It's got it way extended. Maybe sell some out of the money calls. We have a super duper elevated VIX. I would think any type of a contraction in volatility in those calls would get absolutely crushed. I don't believe in the 1% environment. It's possible. Maybe I'll look like a fool, but it seems to me like the risk here in these bonds is for sure at some point lower. Short term, it may hold the bid, but I think it's getting extended. Let's take a look at a couple of the momentum names. Apple, for one, kind of had been holding up really strong. It kind of gave up the ghost a little bit today, again with these lower highs. And then we broke the 20 and the 50, and here we actually broke the up channel, although we held the 61.8 fib on a and the 100 MA on a pretty large time frame from these lows down here at 89 to all the way up to the 103. And the only issue with me for Apple here, and it's kind of just in caution mode here, is that we closed below all of these bodies. So you have a lot of people here that are not correct in their entries. I think that Apple is probably a long if it could get back up over this 99.15. That was today's high a day. And I think that would probably get us up for a test into the 100 area. If we can retake the 50 and 20, we'll play for a move up to the descending trend line, and then maybe for a move for filling up the triangle if the market improves. If we lose this low, though, we're kind of getting into some iffy territory. We have these reference lows in 93, and then down here at 89.65, and another 61.8 on a longer time frame in the 89s. So it could get a little slippery here if the market does have a bit of a decline. So let's just be on guard here with Apple. I think their earnings are going to be pretty good. I think if it does kind of shake out some of the weak hands into the print ahead of earnings, it probably is a buy on earnings for a rally back up. If we jump up ahead of that, it becomes a little less clear. Let's discuss Netflix, because I think this is going to be an actionable trade tomorrow. Netflix has held up really well. I had discussed this I was actually asked today on the stream if I was playing Netflix. It was kind of the first of the momentum names to report, and that to me on this tape seemed like it could be trouble. It closed okay. It closed, but on the backside of the 20 MA with a hammer. But what was concerning for me is that we were making lower highs and kind of a little bit lower lows, but we were still kind of pretty close to the old highs. It hadn't really had a very big, there was no capitulation in this name. And I think you guys saw what had happened with Netflix after hours. This stock was supposed to have, the market makers had priced in a $27.85 move for the earnings and $29.31 for the week, and the stock is down like over 120 bucks or something. I mean, I think it closed after hours at about 3. Let's see. Let's take a look. Intraday, 1 day, 5 minute. Yeah, this is clobbering time. The low was 324.33, and we closed at 330. So what am I thinking with Netflix? I think the stock is probably kind of toast for a while. This is a major outside move, like 3 standard deviations, but we have some reference lows here where this run started from at 299.5, and the Netflix on a longer time horizon, if you take a look, 5 years daily, the old peak before this thing absolutely collapsed, and we all know Carl Icahn stepped in, and the rest was history. But that peak was 304.79. So I'm thinking if we get down into there, like on a gap, if this thing opens up early in the morning, low, it's probably, and considering it's going to be Thursday, it's probably possible to sell the expiring this Friday out of the money puts below these strikes, because to me it would seem that there's probably a lot of options in those areas, and there's probably a lot of price memory, and this will hold at least for a day or two. So on the open, there should probably be a ton of implied volatility in the out of the money options. As far out, below these strikes as you can get with decent juice, I would think you can sell them and and probably get those things to collapse in a matter of a couple of hours. I think another trade will be to buy it up over the possibly for a bounce, what's called the opening drive, up over the 5-minute high, wherever that might be. So like if we open up at 3:30. And the opening, it might have to be the opening 15-minute or the opening 5-minute range. If you buy up over that bar with a really tight stop, maybe you catch this thing for a run for a couple of points, to some type of a fib retracement. Let's draw that out now. If you look here at the close, we closed at 448.59, and the low was here. Let's do that. Sorry guys, I'm a little embarrassed. I didn't have all of this completely done. I'm just kind of thinking some of this stuff up on the fly. This fib is obviously not really relevant anymore since we blew through it. But I don't think we're going to necessarily make it up all the way this high, but it is possible intraday. This was also the initial spike low. Maybe we do make it up to the 38.2. I think something a little bit more realistic, because it's going to probably be hard to stomach that, is the 23.6, which might seem a little bit more reasonable. It's possible that we could have a 20-point bounce here. So at least catch this thing for 5 to 7 points or something over the high. Let's see where it opens up. I think the puts are probably the safer bet. If you're kind of a bit more of a rookie, if you're a pro and you want to do some day trading, let's take a look at these fib levels tomorrow and trade it. We'll just keep trailing the stop up for maybe one every point. Just trail it up every point. The thing runs 1 point, trail it up to break even, 2 points, so on. You keep trailing it up. Maybe we catch a runner for like 10 or 15 points. That would be something fantastic, right? I do think it'll probably wind up rolling back up over. I know that this is a heavily shorted interest stock. That's why I'm thinking of it for a bounce trade on the opening drive. If it loses that opening balance low, then don't go with it. Just kind of set the alert and wait, for it to maybe break into the gap on another day. All right, guys. This already ran over a little bit longer than I was expecting. Let's have a good day tomorrow.